Hello students, this is the second video on unit or output costing. First video is already made and the link of that video will be shared in the I button as well as in the description box. Do watch that video that contains the theoretical information of what is unit or output costing and what are the features of unit or output costing. And when come to this video, in this video I will cover the three solved problems. One is short and two long questions will be covered. And this is the cost sheet format. Again, I kept because cost sheet is very significant for solving the problems of unit or output costing. So cost sheet format which contains cost per unit also is provided. So please go through the cost sheet properly. At the same time, cost sheet, two videos I've already made that will be shared in the I button as well as in the description box. Do watch the cost sheet preparation videos prior to solving the problems of unit or output costing. Now we will take up the first question. Ascertain the profit from the following. Cost of production 44,000 rupees for 11,000 units. And selling expenses 40 paisa per unit. Sales 54,000 units for 9,000 units. In the sense, by spending 44,000 we have produced 11,000 units and we are selling 9,000 units for 54,000. In the sense, the difference is 2,000 units. So 2,000 units we are unable to sell, that will be considered as closing stock of finished product, right? So we will start this question. I have already provided the answer here. So first, cost of production for 11,000 units, we have incurred the expenditure of 44,000. In the sense, per unit we are incurring 4 rupees. And as I discussed, as I have explained just now, out of the 11,000 units manufactured or produced, we are deducting 9,000 units which we are selling off. In the sense, how much we are getting? 2,000 units. So these 2,000 units will be considered as closing stock of finished goods. So this will be deducted. At what price we will take? 4 rupees per unit. So now 2,000 into 4 rupees will get 8,000. So resultant figure whatever we get 36,000, that is the cost of goods sold for how many units? For 9,000 units only, right? To this we are adding selling and distribution expenses, that is 9,000 units which we are selling off into 0.4, that is 3,600. When you make the summation, this comes to cost of sales 39,600 and sales we have given, that is 54,000 per unit is 6 rupees, that is 54,000 divided by 9,000 units. Alright. Then once we write the sales, balancing figure will be taken as profit, right? That is 14,400 rupees. That is 1.6 per unit. 14,400 is balancing figure, right? So in this way we will solve the problem of unit and output costing. We'll take up the next question. When you see this question, we have provided the cost data for the year ended 30th June 1970. We have provided purchase of raw material, direct wages, rent and taxes of works expenses, carriage inwards, opening stock of raw material, finished product, and closing stock of raw material, closing finished product. Bear in mind, in this we have provided tons produced, in the sense tons of finished product opening and tons of finished product closing with the value even, right? Work in progress opening and closing we have given. Factory supervision 8,800, sale of finished product 3,30,000 is the sale proceed of the finished product. Advertisement expenditure we are getting 0.880 paisa and we are sell 25,600 tons of commodity was produced during the year. This information we have provided. So we are required to calculate cost of material consumed, cost of output for the period, cost of turnover for the period, and the net profit for the period. When you come to the answer, we have provided opening stock, then we have added purchase of raw material, then carriage inwards. Altogether minus closing stock of raw material, we will be getting what the raw material consumed. Then we have added direct wages. The resultant figure is called as prime cost. Prime cost is the summation of the total direct expenditure. Here onwards we will add the overhead expenditure. Under that, first we'll take up factory or works overhead. So we have only two items in factory and works overhead, that is rent, taxes of and work expenses and cost of factory supervision. From this, we will deduct the opening stock of raw material, opening stock of work in progress, and deduct, we will add opening stock of work in progress and deduct closing stock of work in progress. The summation comes to 40,480, that will be written as the total factory or works overhead. Once you add factory or works overhead, then you will get the factory or works cost 2,81,600. We don't have any selling and administration and office overheads. Therefore, the resultant figure 2,81,600 itself is cost of production or cost of production of goods. Then we have provided in the question that by incurring this 2,81,600 expenditure, we have produced how many? 25,600 tons of commodity. So when you calculate per unit, we are getting 11 rupees. So 1,81,600 divided by 5,600 will get 11 rupees. To this, we are adding opening stock of finished goods. 1,600 tons, their value is given 17,600. Per unit is 11. And minus closing stock of finished goods, 3,200, that is per unit 11. Clear? 35,200 total cost, per unit 11 rupees. Please bear in mind, in this question, we have provided the value of closing stock of finished product. Next question we will take up, in that it will not be provided, where we need to calculate that. Try to understand the difficulty in the questions, right? Then cost of goods sold. How much we got? 2,64,000 rupees. And for how many units it is? We have produced 2,25,600 units plus 1,600 we had opening stock. From that, we are deducting closing stock 3,200. The resultant figure 24,000 is our total units, right, that we are ready for sale. By incurring the expenditure of 2,64,000 per unit, it will be remain 11 rupees. Then we will add selling and distribution overheads. Selling and distribution overhead, that is 24,000 units into per unit is 0.8 or 80 paisa. So 19,200. The total summation is 2,83,200. This is the cost of sales or total cost. For how many units? Only 24,000, right? And sales we have given 3,30,000 in the question. So balancing figure will be taken as net profit 46,800. So like this, we need to prepare the cost sheet for unit or output. So in this question, very important, finished goods, opening stock of finished goods, quantity and value is given, and closing stock of finished goods, quantity and value is given in the question. Clear? This you bear in mind. In the next question, we will compare with this information. So in this question, again the same information we have, like the similar information, that is opening stock of raw material, material purchase, closing stock of raw material, manufacturing wages, loss and sale of part of plant. So loss and sale of part of plant is not a costing expenditure. It will not be taken while preparing the cost sheet. Bear in mind, please watch the cost sheet videos where I have explained what are the expenses will not be considered while preparing the cost sheet. One of them is loss and sale of plant or any asset, factory rent, other rent, general expenses, advertisement expenses, income tax, provision for income tax, provision for doubtful debts, bad debts will not be taken in cost sheet, right? While preparing cost sheet, we don't consider these expenses. Depreciation anyway we consider. The number of units produced during the year 1978 was 3,000 units we have produced. The stock of finished goods opening was 200 and closing is 400 respectively. The value of cost of opening stock is 2,800, but we have not provided closing stock finished goods value. Please bear in mind, this is the difference between the earlier question and this question. And all the units have been sold during the month. In the sense, whatever opening stock we had, we have sold it off, right? In the sense, whatever closing stock of finished goods that is given 400 it is pertaining to or belongs to which category? The units produced during the current year. Clear? So let's do the answer. Understand? So same way, opening stock plus purchases minus closing stock of raw material consumed are direct expenses, that is direct wages, we got prime cost. Factory overheads, two items we have, factory rent and rates, depreciation on plant and machinery. Factory cost we got. Administration overhead we have given other rent and general expenses 900, we got cost of production, that is 38,900. How many units we have produced? 3000. 38,900 divided by 3000 will get 12.97. Add opening stock of finished good 200 units. The value is already given 2800. We have added each unit at 14 rupees. So once we add the opening stock of finished goods, we will deduct the closing stock of finished goods 400 units. But value we don't have. We have not provided in the question. But we have taken 15,000 5,187. At what price we have taken? That is 12.97. The price at which we have produced the goods. Clear? This is the basic difference you must understand. Then we will get cost of goods sold 36,530. How we got this value? 3000 units produced plus 200 minus 400 units. That is 2800 units we are selling off. For that we have incurred 36,513 rupees is the cost. The per unit cost is 13.04. We are adding selling and distribution overheads. Once you add selling expenses 600, that is given in the question. The total cost is 37,113. Per unit is 13.25. So like this we have to prepare the cost sheet. I hope I made you understand. These are the very important questions as far as the university exams are concerned. I wish you all the best. Thanks for watching the video. Do subscribe my channel and motivate me to make more qualitative and informative videos. Thank you very much.